Hello and welcome to another SRS Pro Weekly Summary. My name is Jordan and today we're going to go over the previous week's examples, which basically starts from the 12th up until the 16th. That would be leaving us with 1, 2, 3, 4, 5, 5, 6, 7 trades, right? Setups or examples here in this table. So let's start from the top and pretty much check them all, because I think in this video you're going to find it pretty easy to use SRS, mainly because the previous week was very volatile and many of these setups will be taking place on the shorter time frames. This is what we're talking about in the club very often, because the market is changing its behavior constantly, right? We're going from slow cycles to more volatile cycles, ranges, extensions, etc., etc. And when we have a moment when multiple timeframes are in synchronization, usually we get a lot of volatility. Once you get the volatility, if you're waiting for the higher timeframes to provide you with a setup, you will be left with nothing. Okay, I know it sounds easy when spoken in theory. It's not in reality. Okay, I don't want to give you false ideas here that you can go ahead, boom, in a click you understand the cycles and you start trading long-term, short-term. It takes time, it takes practice, right? Nothing is impossible. Maybe this is double negative and probably not correct, but I think you get the point, right? Anything is possible if you set your mind to it and if you practice long enough. But enough theory. Let's go ahead and check out a few of these examples and walk you through basically the way we're thinking and how we would be analyzing this stuff. So here you have your QE and notice 15-minute chart, okay? Very short term. Look at the sentiment. Pushing to the downside very, very aggressively. 4-hour chart, 1-hour charts, pushing to the downside very, very aggressively. And when you look at the candle covers, look how many blue you have, look how many red you have. Clearly, the momentum to the downside is very strong. So this is the time usually to drop down to the lower time frames and try to catch these setups when possible on the lower time frames. So here, what do we have? First of all, assuming that this is still in a already in a bearish trend, sorry, not still, maybe even here, you might have very interesting step trading opportunities. Aggressive. Now, this one is not that aggressive because the stop loss is kind of far away and you have a level here. This one would be a bit more aggressive because your protection, let's say, is here or here, which could be aggressive. I mean, by looking at this candle now in the past, it looks easy, right? But imagine you don't see it and all you see is up until here. So you get this kind of consolidation and then you get a breakout and you have no idea whether it's going to turn into this and then spike through your stop loss, or is going to turn into this and continue immediately to the downside. Okay, that's where having a consolidation attack might be creating problems. And again, the difference between this one and that one is that here we have a pretty good spike to the upside and kind of creating a swing here, right? A top, local top. In this case, you don't have it. The real actual top would be this one. Again, all these highs that you see on the way, they're local and they're inside this entire move. So this becomes a bit more aggressive. Think about this one, okay? Again, it is a consolidation, but compared to here, you kind of have two candles which are stopping at the very same level. The problem with this one, however, would be that this level, the breakout level, was never tested, which means if you're selling, you have no clue whether you're going to do this and then go ahead and retest that zone. So basically something like that, right? But still, number 3, if we can do numbers here, number 1, I like the best. Number 3 would be in second place. Number 2 could be even skipped if you're a bit more conservative trader, okay? Anyway, back to the most recent event on the chart, which is this one. Here, the situation is a bit different and a bit easier, I would say, because you have the two waves, as ugly as they might be, but we know that the trend is super strong. Look at the pullbacks, okay? Nothing major. The price is simply consolidating for a second and then continuing immediately down. So this is actually big consolidation compared to all this right here. And once you get the trend line breakout, you know what's the idea, right? This could be also treated as step trading structure here, right? That would be the inner low. This low I wouldn't really consider as tradable. This one I would consider as tradable. But in this case, they both fit, right? We have the trend line and the low, so it would be kind of doing the same thing inside the same candle. Kiwi franc, absolutely the same situation. Sentiment, candle covers. Look what's happening with the blue. Bullish, bullish. Everything is exploding to the upside. Okay, I'm not going to repeat the same stuff I just said because this is 99% the same. After this big, massive bullish move to the upside, you have tiny double wave, right? And then you have a breakout. Probably the only difference is that here you will not get the breakout of the high along with the trend line on the same candle as it happened in the previous example. Next we have, what's that? I think this is gold, right? 15-minute chart. Now that would be a bit more specific because of this here, right? Sentiment, momentum, they're all extremely bearish, but the price action, in my opinion at least, doesn't really confirm what I'm looking at the monitors. Okay, so I would be probably jumping into the higher time frames to figure out what's happening there. But assuming that you have no other understanding of what to do on the higher time frames or how to do it, let's stick to the SRS Pro alone. So what do we see here? And this is absolute basic, guys. So don't feel like you will not be able to do that on your own. All we're going to do here is check levels. So massive push up, consolidation. Okay, now this zone becomes absolutely critical. And if we're about to be continuing, my assumption is that this level should be holding. In our case, it pops to the downside and it doesn't hold. Now the situation is reversed, right? Instead of looking at it as push up, breaking this zone, holding this zone, continuation up for bullish continuation, now we might be looking at it as push down, retesting this level, holding this level, right? Instead of being a support, now it becomes a resistance. And now we might be looking for possible continuation to the downside. Again, based on the sentiment, momentum, and the monitors. So we're looking the specifics of the software, right? And just one level. That's it. Then you might be using, of course, trend line, which is giving us this. This is the consolidation, breakout, and you can see that this zone is massive. Basically, if and once this zone breaks to the downside, you're likely going to continue to the next low and then probably the next levels. In this case, we don't see them, but let's assume this is some sort of swing low. So I would be looking at the next swing low after these levels, right? So as we can see, the zone holds, attempting to go below, failing to go below, and then immediate push to the upside. And it goes and starts playing inside this zone once again. Dollar yen was that, 14, XRP, pound yen is the last one. Okay, let's cover a few more. Dollar yen, look what's happening on the higher time frames, okay? Pullback, big one, but in general, we're looking at very strong bearish momentum. Trend line breakout, okay? And again, we're speaking about the very same thing. fast moves, a lot of volatility. You have to be on the lower time frames in order to catch those, unless you're swing trading them somehow. Okay, immediate push up, probably going for a deeper correction. XRP, which is a repo versus the dollar. This is again the 15-minute chart. Here the situation is slightly different. We have 2 out of the 3 on both sentiment and momentum. Okay, not 3 out of 3. Even though the out season started and we saw some massive moves in the past around 10 days for repo specifically, during the weekend this thing dropped. Up until that moment though, we were in a super strong bullish momentum. So trying to maximize your profits, let's say you're holding for the long-term investment, but you might also try to go ahead and look for intraday opportunities, again, to maximize profits. So all these opportunities, once you identify that this thing is pushing up and it's breaking through critical levels, you can apply software like sRs, for example, which is perfect and ideal for short-term trading. And you can start looking for these opportunities when and if they are going to be presented. Okay, last one, pound yen, because today they are pretty much showing all the same, right? We don't have anything different to discuss as we usually do, so no need to go ahead and waste more time. But again, here I would be focusing on the levels. This is the one, maybe even attaching it slightly higher. And then when we expand it, we can see what's inside this zone right here. Second attempt right here. And basically the level is holding, right? This zone was never retested, by the way. So you're kind of in the optimal place to look for the sells. The price broke below. This becomes now our resistance, holding below, push down, again, push down. And basically, you might be looking at the larger trend line to give you a possible entry with the breakout here. You might be looking at the most recent one, which is going to be giving you the entry a bit faster, but this automatically becomes more aggressive, right? Because now you're trading inside the triangle. Why is this kind of more aggressive? Because if it fails to gain the momentum, you might be looking at bounces and this thing to start playing inside here, maybe even create some false breaks or spikes or whatever. But the larger structure is not broken. This is already 1 hour chart here. Okay. Now look where the actual target would be for this specific case. Aggressive protection versus the most recent swing would be providing 1-to-1. Not ideal because it is slightly below the actual swing here. Well, swing inside, right? Could be 15-minute swing, but it's some sort of low. Okay, let's put it this way. And you're inside this level. So the target is here. It makes sense to be tested, right? Even if it's going to be bouncing, it's probably going to test this level, because what matters the most at that moment, at least in my opinion, is the triangle. So most traders, in my opinion, are going to anticipate this level, whether it's for buying or for selling. That becomes the boundary at that moment for this specific time frame. So just because of the risk reward ratio, that could be making a lot of sense here. And look at it. You see where we got the spike? This is exactly what I'm referring to. That's the zone, that's the level right here. That means some people are attempting to go ahead and short-term scalp this thing and buy it versus here, for example, or somewhere around here. Okay. Other people would be already in a sell from this zone, for example, because at that moment you don't have a triangle, right? All you have is this, that, and this, right? We don't have a real triangle. If anything, your triangle would be broken if you call this a triangle. But anyway, this is the zone, this is the level right here. So sell orders would be floating here. And what better place for short-term intraday traders to cash out than this one, right? You can see the level, you can see the trend line, it all fits right here. So if you're in a short from this place, makes sense to start collecting something, at least partially, right there. All right, ladies and gentlemen, that would be all for this week. If you have any questions, please find us in the Telegram groups dedicated to SRS Pro, or leave a comment below in the comment section right here under the video, and we'll do our best to come back to you as soon as possible. Thank you.